Hi everyone, today I'm talking about buying Dropbox, and I have bought some Dropbox shares for the first time. This is the first time I've bought some shares in this company and entered this position. And it's one that I made a video about in my free stocks I'm buying, and I made a video a few weeks ago saying that I might buy some shares in Dropbox. And I've gone and bought some shares. I'll kind of talk you through what kind of price target I got them at, and then what I'm planning to do with the shares and why I bought the shares. So I bought Dropbox at $18 and $1, which isn't too bad. Obviously, it's quite near its 52-week low, and it's a recent IPO. And I kind of like always wait 9 months after an IPO before buying it. And Dropbox is a service that I already used before its IPO, so I had a good idea on the company, and I really like the product. So when it IPO'd, I was kind of like, right, I'll see how this goes over the 9 months and see what happens. If it drops below its IPO price, and I'm happy at the price it's at, I'll go into and buy the stock. And the stock went to kind of prices that I was kind of looking at, and it kind of settled down a little bit. And I thought, you know what, I'm going to buy these shares. And like I say, I first of all, the thing I knew is I knew the products before its IPO because I used it, and it's a fantastic product. And when I looked into the company itself, obviously it's on a bit of a discount since its IPO. I thought the first thing to do, especially with IPOs, is they're always kind of got so much debt on the balance sheet. So I go into Dropbox, look at what's going on, and there's actually no debt on the balance sheet at all, which is absolutely fantastic. In general, the management's pretty good at all, overall in the company, but when I look at the no debt on the balance sheet is a standout thing, especially for an IPO. So when I then, after I looked into the fundamentals of the balance sheet, I then looked at how the company had been doing, and what really surprised me as well is Dropbox is a company that is making profit already, which is something we don't always have from IPOs. To see them making profit is fantastic. The revenue growth is fantastic. Now, the big reason why this stock has kind of sold off since its IPO is because revenue is kind of going to be slowing down a little bit. But even though when we're saying slow down, it's probably going to be 15%, which is still, really good. How many companies are doing 15% revenue growth? Not too many. And also making profit. So 15% is pretty good. The big worry is because obviously Dropbox is in the cloud industry, and you look at some of the competitors they're going against. There's some big names out there, your Microsofts, your Amazons, Google. They're trying to go against them big companies, and that's the big worry, that now because the revenue is starting to slow down, is it because they're starting to lose the battle to these companies out there? Now, I'd say that obviously it's going to be a hard fight, especially when you've only got one income stream to go against them. But what Dropbox does really well is they have a fantastic products that they offer out there. It is a decent price product as well, and I think the Dropbox are able to hold their own. And if they ever do get into some sticky situations, they've also got that balance sheet to rely on as well, and help them be aggressive in their expansion, which they have been doing recently. That was one reason why the EPS could have grown a little bit more, but it didn't, because they were quite aggressive expanding the company, which will help their gross margins hopefully going forward. But Dropbox, I think, can hold their own in this sector, and they've done a fantastic job so far. So when I look at the history of how the company's done against the other cloud industries, they've held their own over the last few years. So I don't see that changing going forward. Obviously, there might be a slight little change, but nothing crazy going forward. Now, the big thing that kind of like pushed me across the line was the other day when I looked and saw the insiders. Now, I like seeing what insiders are doing. When I look at the insiders, the CEO of the company actually went and bought, I think it was 500,000 shares. I'll have to put the article down just so we check it on the video. But yeah, that was a lot of shares. I was like, wow, if management, with his own money, if he's buying that many shares, he's confident that this company is cheap and going forward. And even before that, I saw that article, I was kind of confident in the company. But that was like the one thing that kind of made me go, this guy's backing his company, I'm going to back his company as well. And it looks quite good for Dropbox going forward. And I'm quite happy I got in this position. And kind of what I'm looking for now is probably, for me, $30 seems about a fair price for this stock. So I'm probably going to sell probably around the $30 range. I probably see that Dropbox getting there probably in probably a year, 2 years maybe. So it's going to be a little bit of a haul, but nothing, 5-year crazy. We're talking like a Microsoft and Tesla. Probably I would say about a year to 2 years, depending on. There's quite a bit of negativity around Dropbox, so when that goes off, that probably what will help the stock goes up, and probably won't go up to next earnings unless it does a good earnings going forward. That might be the catalyst to send it up. So I potentially before earnings, I might buy a few more shares in the company. I'll let you know if I do. If I do, I'll probably make a video about it going forward. Also, another great thing about this company is that because of how fantastic it is with no debt and its growth, it does seem like there's potential for another major company to go and buy Dropbox out now it's public. Obviously, that's kind of like, you can't take that for granted, so I didn't invest in that for that reason, but that's also something to, look at, because it is, they have so much. I think it's like 1 billion on their like balance sheet right now, which is absolutely crazy. So with a company growing at this sort of rate with a fantastic product, you would kind of look and say, does anyone kind of want to get in the cloud industry and go buy Dropbox? So we'll see what happens, but forget about that. Overall, this company, the fundamentals look quite good going forward, and that's why I got into the stock. And like I say, if I do buy some more shares, guys, I'll make a video about it. But if you could give the video a like, subscribe if you haven't, and I'll see you in the next video.